Ever feel like you're just drowning in numbers and jargon when you look at financial reports? They
Yeah.
can be pretty overwhelming, right? Well, our mission here is to, cut through all that noise. We want to give you the key insights, the stuff that really matters, so you can feel well informed without spending hours decoding everything. Today, we're diving deep into Lupin Limited's latest numbers, specifically their Q1 results for fiscal year 26. That's the quarter ending June 30th, 2025. These results just got the green light from their board on August 5th. So, our goal, let's unpack these figures. Let's figure out what's driving Lupin's performance, what it tells us about their strategy, their financial health, and I think we'll uncover some interesting details along the way. Ready?
Absolutely. And to really get Lupin's story this quarter, you have to start with those big headline numbers. They really paint a picture right away. Strong growth, consolidated sales hit, INR 61,638 million.
Wow. Okay.
Yeah, that's up
Yeah.
11.8% compared to last year, and even 10.8% up from just the previous quarter.
Almost 12% year-over-year growth. That's pretty solid. It suggests they're, really tapping into market demand, or maybe new products are hitting the mark.
Exactly. It points towards, effective strategies, whether it's new launches or just penetrating existing markets better. Consistent growth like that is a good sign.
Okay, that's the top line. Promising start. But what about profitability? Does that follow suit?
It does, and maybe even more impressively. Let's look at EBITDA.
Right, earnings before interest, taxes, depreciation, amortization.
Precisely. That reached INR 18,063 million.
Which, yep, how much?
Get this, 38.0% higher than last year and 31.1% up quarter over quarter.
38% year-over-year jump in EBITDA. That's huge. What's behind that kind of efficiency gain, do you think? Cost cutting? Scale?
It's likely a mix. Their EBITDA margin expanded significantly by 560 basis points year over year.
So 5.6 percentage points higher, now at 29.3%.
Exactly. That kind of jump points to real discipline. Better
Right.
cost control, maybe supply chain improvements, manufacturing efficiencies, maybe even better pricing. And achieving that while growing the top line suggests they might be hitting a new level of operational scale. It's really about getting more profit out of every rupee of sales.
That makes sense. And that kind of efficiency, it usually flows right down to the bottom line, doesn't it? How did their profit after tax, the PIT, look?
Very strong. PAT came in at INR 12,215 million,
And the growth there?
up 51.6% compared to Q1 last year. A really substantial increase.
Over 50% PIT growth.
Yeah,
Yeah,
a
true.
very strong start to their fiscal year. And it echoes what their managing director, Mr. Nilesh Gupta, said in the press release.
Oh, right. What was his take?
He mentioned strong business momentum anchored by a robust product portfolio, improved efficiencies, and effective use of assets. He specifically highlighted their focus on compliance, innovation, and technology to unlock sustainable growth.
Interesting. He mentioned innovation and technology. Given these strong Q1 numbers, where are they placing their bets for the future? Let's break down where the growth is actually coming from. Regionally, maybe? Starting with the US. Still a powerhouse.
Definitely still a powerhouse.
Hmm.
The U.S. is bringing in 39% of their global sales. That's INR 24,041 million for the quarter.
Okay. And the growth rate there?
Strong.
Yeah.
Up 24.3% year over year. If you look in U.S. dollars, it was $282 million this Q1 versus $231 million last Q1. Shows real momentum in a key market.
And their position there is quite something, isn't it? Third largest pharma player by prescriptions, both generic and total market.
Right. And they lead in, 47 of their generics. Top 3 in over 100 products.
Plus, they got 2 ANDA approvals this quarter. That's the generic drug approval pathway.
Correct. Abbreviated new drug application. Getting those approvals is key.
And they launched 3 new products, too, bringing their total U.S. generics to 139. What does that tell you, really, about their strength in the U.S.?
It says they're not just present, they're deeply embedded and competitive, being third largest, leading in specific drugs. That means strong ties with pharmacies, with doctors. The ANDAs and launches show their pipeline is working, they're consistently refreshing and expanding their offerings. That's crucial in the generic space. It's about staying relevant.
Makes sense. Okay, so the U.S. is strong. What about their home market, India?
India also put in a solid performance. Sales, there were INR 20,894 million.
Which is about.
34% of global sales, increased 7.8% year over year.
Okay, steady growth.
Yeah, and they're the 8th largest player in the Indian market. They also launched 5 new brands there this quarter across different therapy areas. It provides a stable foundation.
Good base. And beyond the U.S. and India, any other notable areas?
Yep, they saw good growth elsewhere too. Other developed markets, think Europe, Australia, etc., brought in INR 7,748 million.
Growth.
They're pretty strong, actually, up 17.4% year over year. It's about 13% of their sales. And then emerging markets contributed INR 6,524 million, up 5.2%, making up the remaining 10%. So they're quite diversified globally.
Okay, so strong growth across most formulation segments. But here's something that caught my eye, kind of counterintuitive. Their global API sales, active pharmaceutical ingredients, the raw materials actually declined significantly.
Ah, yes. That is interesting, down 32.9% year over year.
Right. It's now only INR 2,431 million, just 4% of their global sales. What's going on there? Is that strategic? Are they moving away from APIs?
That's a great question. The report doesn't explicitly spell out the why, but you can speculate based on trends. It could very well be a strategic choice, to focus resources on the higher margin finished products, the pills and injectables, maybe de-emphasize selling raw ingredients externally.
Or maybe just market softness or
Well,
competition.
could be. Or another possibility is they're using more of their own API production internally for their own formulations. That would look like a decline at external sales, but it's actually an internal shift.
Okay. So definitely something to keep an eye on, that API piece.
For sure. It's a nuanced part of the picture.
So if API sales are down, where are they putting their money? You often look at R&D for clues about future strategy, right?
Exactly. And Lupin is definitely investing there. R&D spending was up
How much?
INR 4,844 million in Q1. That's 7.9% of their sales.
Compared to?
INR 3,500 million, or 6.3% of sales, in the same quarter last year. So a noticeable step up.
That's a significant increase in R&D as a percentage of sales. What does that pipeline look like?
It looks robust. They have 442 cumulative NDA filings in the U.S., with 342 approved so far, and importantly, 49 first-to-file opportunities. Being first often means a period of exclusivity for a generic.
Like a head start against other generics.
Precisely. And 19 of those 49 are exclusive FTFs. That's potentially very valuable. It shows they're not just making generics, they're targeting complex or high-value opportunities.
Okay, strong pipeline focus. Now let's talk financial health again. One thing that really jumped out was their debt situation, or rather lack of it.
Ah, yes, the net debt position. It's actually negative.
Negative INR 12,386 million as of June 30th. So they have more cash than debt.
Exactly. They're in a net cash position. The net debt to equity ratio is negative 0.07.
That sounds incredibly healthy. What does that signal?
It signals exceptional financial stability and liquidity. Think of it like having a big safety cushion or maybe dry powder for opportunities. It gives them immense flexibility for R&D, for acquisitions, weathering downturns, whatever comes their way without needing to borrow. It's a very strong balance sheet.
And maybe that strength is why we're seeing some strategic moves, like that acquisition in the UK.
Quite possibly. They acquired Renaissance Pharma Limited for about INR 1.4 billion or GBP 12.3 million during the quarter, using that cash position strategically.
And there were also those internal transfers, right? Moving the OTC business and the API R&D.
Yes, exactly. They transfer their Indian over-the-counter business, things like non-prescription meds, into a wholly owned subsidiary. That was valued at INR 8.2 billion.
Effective July 1st.
Right. And they did something similar with their API R&D unit in India, transferring it to another subsidiary for INR 180 million, also effective July 1st.
So these aren't sales to outsiders, but internal restructuring.
Correct. It looks like moves to streamline operations, maybe give those specific business units more focus or autonomy, sharpening the structure.
Got it. And just for context, they also had that Glumetza settlement last year, right? About $9 million.
Yes, that was settled in Q1 of the previous fiscal year. It just shows they're actively managing ongoing legal things and financial risks as part of the business.
Okay, so let's try and wrap this up. If we recap this deep dive into Lupin's Q1, what are the main takeaways?
Well, I think the big picture is definitely robust growth, both top-line sales and very strong bottom-line profit improvement.
Driven mainly by the U.S. and India performing well.
Exactly. Key markets firing well. Plus, that clear commitment to R&D, investing more, which signals future focus.
And you can't ignore that financial position. Being net cash positive is pretty remarkable.
Absolutely. Huge financial health indicator, even with those strategic tweaks like the internal business transfers.
And the API sales dip, which we need to watch, but it seems maybe part of a bigger strategic picture.
It seems plausible, yes. Context is key there.
So it leaves you wondering, with these internal shuffles, the R&D boost, the cash pile, what's the next big strategic move for a company like Lupin?
That's the provocative thought, isn't it? How are giants like Lupin restructuring themselves not just for next quarter, but for the next decade of pharma innovation and competition? These internal moves might be laying the groundwork for something bigger down the line.
Definitely something to ponder. It's certainly a dynamic space to watch.